Okay, and share screen. There we go. Share. All right. So I'm recording it in Zoom now. Okay. And I'm going to start on a right from the start. Okay, let's just do it that way. Okay. So what we are looking for when we do the initial analysis on the start of the week, right, is we look at the weekly, daily, and H4 lineups. Okay. So this is and I'll just go down the pairs that we look at. So the Aussie yen is not lined up because the daily is not in a swing, whereas the weekly and the 4-hour are long. So this is not a trade for that week, for this week. I look at the Aussie dollar. The Aussie dollar, the weekly and daily is lined up. So this is a potential, right? So I'll put it as a potential. I'm keeping track of it on the side. Aussie dollar. Wait for H4 stock to turn red to go short. Okay. That's basically what we're doing here. Because the weekly and daily are lined up, we have to wait for the 4-hour to turn over, which is over here. And that's our trade. So you get a 2-ball, and now you're just waiting for the 4-hour to turn over. And at this point, really what the trade is that if you're going to trade the Aussie dollar, is that you can drop it down to the 1 hour or 15-minute, and it'll give you an early indication of when the 4-hour is turning. So you don't have to wait till the end of the 4-hour, which would be correct. 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 We want that one big trade, right? What FSS used to call a mega trade. That's basically what we are doing is when the weekly and daily line up, when the H4 lines up, you're going to get a mega trade, right? So if you did this trade just on the 4 hours, 86 pips. When the H4 went out of sync, okay, so we do it from here to here, 66 pips on an Aussie dollar trade. Now, okay, so let's just keep going, right? CAD yen, no trade. Swiss yen is bullish trade, right? And it's ready right now. So let's put it in CHT, ready to go long, right? And if we can look at this trade right away on the 15-minute, right? And so I have to take this off and go to Monday right here. Okay, so now we are looking to see where everything lines up, which is over here, right? But this is after hours. So really the trade is over here on Tuesday. This is the trade. And that gave you 27 pips. Not much, but it worked out. And then you know that it's going to turn down. I mean, this is a 4-hour 3-ball. So you know when everything lines up, you can go. But we are looking for mega trades. We're not looking for itty-bitty trades, right? So this won't be a short trade as far as the mega trade is concerned. So then we look at the Euro Aussie. Euro Aussie is not a trade. Euro CAD was we wanted to go long on this Euro CAD. So this is another one where you have to wait. EC 84 H4 stock return new to go long, right? So similarly, if you took that trade here, it didn't give you much, right? 32 pips. The point is you won't have a negative trade and you won't have a hard burn on a trade. All right, so let's look at Euro Yen. Euro Yen was borderline long and ready to go, right? And since this is in a one ball retrace, the trade came in over here, somewhere over here, and that gave you 57 pips, 40 to 57 pips. Okay, so EJ ready. Okay, then ENZD. ENZD is a long, right? Weekly, daily, 4-hour turn long. Here's your trade. And this one, flip-flopped right away. So depending on where you got out. Euro dollar. Euro dollar is not a trade. Pound Aussie. Pound Aussie, not a trade at the beginning of the week, right? So you're going to miss some trades at the middle of the week unless you come in every day and check. Pound CAD. Pound CAD is a long, ready to go, right? Ready to go long. Okay. Pound Swiss. Pound Swiss is no trade. Pound Yen. Pound Yen is ready to go long. Yeah. Well, it wasn't ready at the beginning of the previous week, but it got ready 4 hours later. Yeah. Okay, and then Pound NZD. Pound NZD is ready to go long. From the stochastics, but you have to wait for the 4 hour, right? I mean, you have to wait for the one ball retrace. You want a retrace before you go. You don't want to take it in the middle of a trend. Then pound dollar. Pound dollar is not a trade this week. And then NZD yen, no trade. NZD dollar, ready to go short. But you'll be taking it against the 3 balls, so it's at your own risk. USD CAD. USD CAD is ready to go long, but you have to wait for the retrace, right? So UCAD. Okay, and USD Swiss, no trade. USD Yen, ready to go long, but you got to wait for the retrace to finish. Okay, and then you have the gold, and gold is not ready, right? So basically, you have 1, 2, 3, 4, 5, 6, 7, 8, 9 trades that you can take this week, right? So let's just go through each trade and see how it worked out. Okay. So first trade was Aussie dollar. Aussie dollar, we are waiting for the H4 to turn short, right? So we go to the 15. And H4 turns short over here. Here's the entry, right? No, next bar. Next bar. Okay, here's the entry, right? And this is the entry because all stochastics. Well, the H1 didn't quite turn. So you take the next one, which is here. Everything's red, right? Your stop loss is up here, right? So this is a 50 pip stop loss. Okay, now if you're doing 10, in my case, $200,000 account, 10 lots for 50 pips, 100 pips basically, right? And you're already at a 50 pip stop loss on this one. Your lot size is going to be small. So since you're doing 10 trades, you're going to accommodate 2 lots for 50 pip stop loss. Okay, so we're doing 2 lots for each trade. Okay, you go back to the 4-hour, and your trade is basically to here. You get 60 pips, 50 pips. Okay, I'm making notes on the side here. 3 pips, 3 lots. Now you got the Swiss yen. Let's get rid of these lines. Swiss yen. Swiss yen, we were ready to go long. It was ready to go. So go to the 15-minute. And we already did this one, right? We got 20 pips out of that. 20 pips, 2 lots. Then EC, EuroCAD. EuroCAD, we were waiting for the stock to turn blue to go long. So 4-hour, we were waiting for the 4-hour to turn. And the 4-hour turned. For us, our purposes, it turned over here. So the entry was here. Right? There's no entry before that. I mean, this was an entry, but this was way before, right? And didn't have a retrace on this one, so there wouldn't be a good entry on this one. This retrace served as an entry. You do a retrace to minimize your drawdowns, right? So this is again 50, 60 pips stop loss. So it's again 2 lots. Go to the H4. And the H4 turned over here. And that's 30 pips. Okay. EJ. EJ, we're ready to go long, right? We're waiting on the H4. So EJ. 15-minute. What were we waiting? We're waiting for the one ball to finish. And notice I'm taking the entry on the 15-minute, but you can take the entry on the 5-minute. So Monday, and here's the 4-hour turning. After hours, here's the entry, right there. Somewhere, so right there. And you can see that the 1 ball retrace finished on the 4-hour. The orange ball being the 1 ball on the 4-hour. And this is a 40 pip stop. And the trade ended here. And it's a break-even trade, okay? So this is break-even. Pound CAD. What was the condition on the pound CAD here? Pound CAD, we were waiting for a retrace, right? And just draw the vertical here. Drop it to the 15. The entry is here. Retrace finished. Entry started here. And there's your entry. Go back to the H4. 4 finished over here. And that's 110 pips. 2 lots. Next one is a pound yen. Pound yen. Again, we were waiting for the retrace to be over or get a retrace on the 4-hour. Here's the retrace. 15-minute. This have turned over here. It didn't get an entry here. So your entry is here, correct? Somewhere in here is the entry. And this is a 57 pip stop loss, right? Not is done come close to it, right? So it's not like you're actually risking that money. And here's your exit somewhere in here. Actually somewhere in here, right? 4 hour. And that's 154 pips. 2 lots. Next one is found in New Zealand. 4 hour. What are we looking for? Again, we're waiting for a retrace to finish. I mean, it's just because it's ready over here doesn't mean that you have to take it, right? You just know what the general direction is. Now, here's your entry right here. It's all news. And your exit is here. This is Asian session, so somewhere in here is the exit. It's 105 pips. 5 pips. 2 lots. Next one is USD CAD. Is it simple enough to understand what I did? Okay. Yeah, I'm not changing anything here. Yeah. So here we are. We finished the 2-ball retrace down to the 15-minute, 4 hour, and here's the entry right there. Right. See, I'm doing on the 15-minute, but this is probably a news item right here. So we don't get caught in the flurry of news items, right? And your exit is over here. That's 35 pips. $2. And the last one is UJ. And UJ, we were waiting for the 1 ball to finish. Happened here. 15-minute, and this one gave an entry after hours here. Give an entry here, right? And go back to the 4 hour. Now here's a choice. You can get out at the 1 ball and then get back in. So you have 2 trades here. And this one gave you almost nothing, like 23 pips. And then this one, and the reason for this is you need to get in here, right? So 15-minute. So the entry is somewhere here, which is today's entry. And this stop loss was 46 pips, and the exit 43 pips, right? Okay, so that's 50, 20, 70, 100, 210, 364, 470, and another 80, 550 pips for the week. And the week's not over yet, right? Well, let's say we got 550 pips on 2 lots. 550 pips on 2 lots is an average pip value of about $8. Okay, so 8 times 550 is 4,400 times 2 is almost 9,000, less than 100, $9,000. with no stress. There's always stress. I mean, since we're doing the FSS here. No, you're not pulling your hair out. And you have a definite direction. When you're trading, because your higher time frames are all lined up, right? So freaking dollar is falling, which means the pound dollar is not doing too good. Yeah, down 20 pips. I just let it play out. This is what happens after a news item. Everything lines up and then it just goes off bonkers. But if I look at the 4 hour on the pound dollar, it lined up and then went out of sync. And now I'm looking it out because the 4 hour is now telling me it's a blank, right? So I took a 20 pip loss. And really, this week there was no trade on the pound dollar. So I shouldn't even have been looking at the pound dollar. Correct. So this keeps you, by looking at these two, it keeps you from pairs that you should not be trading, right? I mean, we have a penchant to trade the pound dollar, but the pound dollar didn't set up here. When it set up over here last week, right there, right? And if you drop it down to the 15, what happened? Where did it go? Oh, this was that week. Okay. Take it over here. I can get a bead on it. Hook it to the 15, and there it is, right? And your entry, your real entry is here. Now you're gonna ask me why this is an entry and not this. Look at the stochastic. This was a fresh signal. Correct. So every time it does a fresh one, you get a 1 wall or 2 wall retracement. You see here, the refresh. This here, right there. When it went down like this, and here, it gave you this one, right? So now, if I go back to the H4 and say, okay, I want to get out at the 1 wall, that's 55 pips. And then I can look for another trade over here. And go back to the 15. And say, okay, where's my trade? 4 hour, 1 hour is starting over here. So this trade is somewhere over here. There's the trade, right? And that gave me 80 pips, so 130 pips on 2 trades. Or I could have been brave and said, I'll just wait for the daily. I don't want to do that, right? So it's prudent. I mean, look at this trade here. Everything lines up, and there's the trade. Now, you're not going to go over the weekend, so you take this trade, then you come back and take another small trade here, right? That's the general idea, right? I mean, a lot of people trade the gold and then trade it blindly, not knowing what to do. This is telling you to go short right here. But where's the short? It's telling you it's lined up here, right? But look what it's doing. two ball retrace. The actual entry is over here. So there's the first trade, 100 and whatever pips, 200 pips. Here's the second trade, another 200 pips. And here's the third trade, another 150 pips. If you want to do counter trend, you can, but I wouldn't advise it. Yeah. Yeah, and then this week, here's the short, right here. It's another 180 pips. Or, I mean, if you got out early, then you got out here, made a few pips, and then came back and took another entry here. And this is a spike, right? Down to the pivot. You like to trade the USD as one of your primary pairs, right? But look at this week. Even though these are lined up, it's doing a full week retrace. And you didn't get an opportunity till last week. And then the opportunity came here, not here, right? Even though it's all lined up. So you got a fresh over here, and then if you stayed in the trade, that's 377 pips, but you probably took 180 here and another 90, so 270 pips. Do you have any questions? I mean, I'm taping this, so. Yeah, but I mean, this is for the recording. Do you have any questions? Okay, I mean, there's a short right here. Look at this. Yes. Yeah. So just for the benefit of this recording, I'll go over the indicators again, right? The setup. I have on the 4-hour chart, I have the daily and weekly snatcher, right? The daily snatcher is the blue ball, and the weekly snatcher is the orange ball. Okay, you don't see it here, but if I go back to the weekly, here's my 3 ball. Here's the 2. Well, let's just do a 3 ball and go back to the 4-hour. It's hard to find on a week. Let's see, weekly. Daily. Line it up. And here's the 4-hour. You see this? This is the weekly 3 ball in orange. At this point, if you're strictly trading the 4-hour, all you're saying is, I want everything to line up short. I'm not taking any longs, right? That's one way to trade. And here, everything lines up short. Here's your entry. There's your trade, right? 752 pips. Now you get a retrace, right? 3 ball retrace. And so, okay, where's my next entry? Here's my next entry short. And I usually get out of the 2 ball, right? But at the end of the week, 100 and 200 pips almost, right? Now I come into this week and say, okay, I'm going to 2 ball retrace. Here's my entry. And okay, anyway, so that's the setup, right? So I got a weekly and a daily snatcher. I have the 5 EMA and the 12 EMA, okay, as my moving averages. Then what I have at the bottom, and then I have my pivots, of course. At the bottom, and then this the pipsometer counts the pips for all my active trades. I have this EA, which can close out all the trades for this particular symbol. And then I have the symbol itself with the time frame. And this is an indicator for showing me the spread and how much time is left on the bar for that time frame. Under that, I had three stochastics. This is the long term, which tells me the long-term trend. I have the medium term, which is the white one, tells me the midterm trend, and the green one, which is the current trend on the time frame that I'm looking at. So technically speaking, this is the 4 hour. If I'm looking at the 4 hour, this is a 4 hour. This one is the bi-weekly, so it's half a week, right? And this is the weekly 2 weeks trend, the 2 week trend. Okay, so 2 weeks, 3 days, 3 times, 3 days. 15 times 4 is 60 is 60 hours is how many? It's half a week, right? So this is half a week, 2.5 days, right? And this is the 4 hour. So 4 hour, half a week, and 2 weeks. That's what these trends are showing me. Okay. Three weeks, right? When it crosses the 50 over here, that's when your trend changed to bullish. When it came down here, it became bearish. So I'll explain in a minute, but let me just go through the indicators, right? This one here is the actual entry on that time frame for the stochastic, and all that means is all three are above the 50 level. Okay. If the 2 week is above the 50, and then the current and the midweek cross the 50, that's when it gives you the signal. So here's the signal. And then it continues in that signal till something changes when they go out of sync, right? And then it gives you a signal back here. And another signal when it turns up over here, right? But not all signals are valid, are good signals, obviously. You're looking for a signal like this, not a signal like this. Okay, so this signal is a invalid signal. It's not an entry because you don't want a short turn. You want the longest turn, right? So this one will give you that one more retrace. This one did not give you a retrace. Okay, so that's what this indicator is. This is telling you the where the stochastics are on the current time frame, right? So the aqua means that they're both the midterm and the current term is turning up. Okay, and it's below 50 when the turn up. One of them is below 50, or both of them are below 50. Okay, the what do you call it? The darker cyan, I guess, dark cyan, is when both of them are above 50 and they're in the same direction. Okay. Now, magenta is when both of them are below the 80 and are matching the direction. So that's what that is. Okay, even though this is above, so this is an exit or a cautionary. Then again, it turned back up above 50 and give you that. And then when they both are above 80, then they turn blue. Okay, so those are the three colors. And then the red is that they're both below 50. And when it comes below 80, then it becomes dark red. So those are the three color variations. Okay, so we have the same setup for the 4 hour, the daily, and the weekly. Okay. This is just telling you, regardless of the overbought, oversold, where the swing is. That's all it's doing. And this is the weekly. This will be the MA's trend. This is really the stochastic trend. So I need to rename that. Right, stock. So the only difference between this and this is this one takes into account the overbought, oversold, and the 50 level, whereas this one just goes, where's my swing? That's it. Okay, and this one you don't need to worry about. This is the lower time frame where you don't need to worry about that. So that's why when the weekly, daily, and 4-hour come into sync, it's a very powerful indicator that the price is moving up. And then when you get a signal like this one here, and this wasn't ready, so this wasn't a signal. But like here, you got a signal, and you can either stay till the till the end of the week or whatever. It's up to you how you want to do it, right? You can take it, and this then will become an add-on because it's in the middle, right? So that's the way you trade it. But for our purposes, we are looking for the sync and then taking refining our entry on the 15-minute or the 5-minute, either one, whatever you want to do, right? Okay, so you had a question about something, the crossovers, right? So when crossovers happen, what happens to the stochastic? Every time the crossover happens, let's mark that up. Crossover over here, crossover over here, and then a crossover over here, cross down over here, and then cross up over here. Okay, so what happened? Stochastic changed. Stochastic continued or changed, right? Stochastic when it happened over here in the retrace, and then same thing here. This is sideways market, right? And this is also sideways market. You can see back and forth, right? There's no trend here. There's no continuous color like this, right? And then when it actually took off, everything started to slope up, and you got this everything in the blue, overbought. Now, most people, when they say, okay, it's overbought, we need to start looking for a sell. Is this giving you a sell anywhere? Are you getting a sell signal anywhere? So why would you even be thinking about a sell? Correct. Yeah. 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 So here's the thing, right? I mean, if you're on a 4-hour chart, the trend you're really following is the weekly. Okay. That's the sister time frame for the 4-hour chart. Right. So your weekly turns long here, right? And your fresh doesn't happen till here, right? In the middle of this. But you say, okay, I'm not taking that. So here's your actual entry right here at the end of the week. And let's say we were brave enough to take that entry, right? Right there. Now, what is your weekly doing? Has it changed direction at all? So if you took this trade here and stayed in the trade, 400 pips. But we're not, I mean, if you're trading a prop account, you're not going to be allowed to do that unless you're doing swing, right? So in that case, we have to break up our trade. You don't want to take this, you don't want to live through these retracements. So you say, okay, I'll take it to the one ball. When the one ball happens, the very next bar, you can see there's your exit. That's 100 pips almost. Then you get a re-entry on this bar, somewhere in this bar, if you take the 15-minute. And that gives you this trade for another 160 pips. And then you come in here, and here's your re-entry. And this gives you 97. So you made 250 and you made 350 already. So why would you wait all the way? You get what I'm saying? And then you come in again here. Where's my entry? See, the one ball retracement finished, but there was no entry because stochastic was down here. So your entry is here. Yeah, it didn't give you much. It gave you 50 pips. Boo-hoo. And then here, right now it's up 24 pips, but at this ball it was up 50 pips. So it's 100 pips. 100 pips on something like this, on a consolidation pattern. Are you telling me that you won't take 100 pips on something like this? This is setting up, technically this is setting up to go short, but it's not ready yet. Right? If I was just doing pure technical analysis on the chart, I would draw my triangle and say, okay, this is a tightening range, right? So I can't trade this. But my stochastic is saying, go ahead, take your trade. You may not make much, you'll make something. Pound yen is another thing that's a lot of people trade, right? What did the pound yen do? Weekly turned over here. Now, this swing will take the whole week to confirm, right? But starts to turn, and here's your entry. 218 pips. Here's your entry. End of the week. Get out for another 50 pips. Here's another entry. 200 pips. And now you're saying, okay, what do I do? It's giving me another entry, but the daily is not ready. I need to stay out. It needs to sort itself out. Right now, it's got a daily 3 ball, so more than likely the price wants to push down, and that's what the daily is telling me. There's no trade. And most people will try to take a trade on this. If I was looking at the 1551, which was the 1-minute chart, and I go to the European session. Okay, 1551, I need the 1 hour. And my trade starts here. So my fresh is over here. Come on. This is my fairly fresh one because retrace, right? And I get a 5 pip drawdown. And my trade, let's say, ends over here. It's 38 pips. You can do this on any time frame. This system is set up that whatever your heart desires, you can do. You can trade on the 5-minute if you want. There's a 5-minute trade right there. If you want, there's no fresh on this. This is all continuation. So the real trade here is the long trade. There's the entry. 40 pips. Don't tell me the pound down is dropping. Dollar is weak. That's right. Yeah. Yeah. Well, based on our long-term look, you stay away from the pound. There's no trade on the pound. I mean, this is against the 3 balls, so you're trading a 2-ball retracement, which can go up and down. So, yeah. Well, the previous setup was using the MACD on a shorter time frame as well as on the regular time frame and the AO. The AO is extremely slow, right? And I mean, I can put the 34 up here and that'll give me the AO. Let me do that. Where is my trend moving average? I'll put the 34 simple IO. And there's a AO, right? So if I'm doing the 1 minute chart, which is our 15.51 system, right? Right? And I look at it for today. This is the pound dollar we're looking at. And you say, okay, this is the AO is telling us to go short, and then crosses over. So the AO is actually flat over here. And you can see the slope is down, but it's not really helping us, right? So the AO starts to form itself when we get our signal right here. That's our signal, and the AO, the slope has increased. And you can see it really takes off over here. And there was another signal here. You can marry the constants, but definitely the MACD, which is using the 12 and 26 as the moving averages, right? Exponential moving averages, crossover. And if I put that up here, I know, but I'm just saying if I put the MACD, I have the 12 already, so all I need is the 26. Exponential goes, and let's make it white. All right, so there's your MACD right there. Every time the 1226 crosses over, it's crossed the 0 line on the MACD. Okay, so this is where the bearish is. No, the filter is the faster version of the MACD. That's the 53.1 or something like that, whatever. I forget what the setting is. But this is a regular MACD, standard MACD. Okay. So if I didn't have the 5 and 12, which is a far faster version of the MACD, really, the MACD crossed over here. There's one signal to go short, right there. There's another signal in here to go short. MACD somewhere in here. Okay, so it would give you a few pips, but where are your exits? Because the 15.51 doesn't have all of these, right? Your MACD is going up and down, right? Positive, negative, positive. As this closes, it becomes positive, right? So this has become positive. And they'll give you a saddle, which is what this is. They'll give you another saddle right here, another saddle right here, another saddle right here. And then basically it'll conk out, right? Because then the 12 and 26 crosses over. So what information is this giving us that I don't already have on my screen. And I have a much cleaner screen. I'm just looking down here for the momentum and then bang. Right. So the 1551, this is it's more refined than the 1551. Let's put it that way. Right. So technically speaking, okay, if you take everything off, right, you say, okay, the 1 hour has turned. This is my retrace is done. My stochastics are coming down. Here's my entry when the 5 and 12 cross, right? And I take an immediate exit because it crosses back up. So I take a 5 pip loss here. Then it crosses over here and come all the way down. And here's my exit. 22 pips. Right? Because it's crossed above. Yeah. And then I'll say, okay, do I need to go long here? No, I don't have a long. So I get another short here. Right? Crossover. Fresh. 15 is not ready, but everything is short, right? Here's my exit. It's another 7 pips. Now I'm looking for longs. And let's say I come in here. Here's my long, right? Fresh. Crossover. Here's my exit. This is before the news. Then after the news, so okay, I'm still looking for longs. There's my long. Yeah, drawdown of 7 pips. And break even. Still looking for longs. Here's my long. Here's my exit, 10 pips. So you can apply the same principle to the 1 hour, for example. So obviously longer time frame. Here's your entry. Here's your exit, 100 and some pips. Looking for short again. Here's your entry. Here's your exit, 70 pips. Now you're going long to the blue ball. Here's the entry, exit, 50 pips. Now you're going short, entry, and this was news item, so you'd get out break even or whatever, right? Here's your entry, 15 pips. Now you already got that you start to go short here, so you'll be a little bit careful. Here's the entry. Here's the exit, 32 pips. On a crappy trade, right? If you're looking at Aussie dollar, for example, at the beginning of the week, which is one of the trades we had on our radar, right? We are waiting to go short. Okay, Monday, we are waiting for it to go short. Here's my short, right? 72 pips. Waiting for short again. And it closes above here, 46 pips. So that's 120 pips. That's more than what I made on the H4. But I know my direction, right? So I can go short again here. And this one gave me 7 pips. 27 pips. Oh, yeah. And then 11 pips. So during the end, I mean, in the past week, it became crappy, but I got like 150 pips out of this. Just knowing my direction and following the simple moving average methodology. But every time it crossed over, I'm going to get a fresh signal. Or right around there, I'm going to get a fresh signal. Every time. You know? Here's the trade, 40 pips. So there are multiple ways. I mean, I have the 5 and 12 as a visual just to keep me in check, right? So if I take this trade, for example, do I wait till the end? No, I can take it, crosses above the 5, I'm out, 50 pips. Here, I'm out, 12 pips. Here, I'm out here, 50 pips. It's all in your execution of what is it you want to do. Here, I can take counter trend now. Here's my exit, 17 pips. That was on Friday. So I come in here, and here's the trade, 21 pips. Now I'm back short. And all of this, I'm getting signals. When this happens, I'm pretty sure the stochastic is turning up right here. You can see that as it crosses the 5. It crosses a 5 right here. There's a signal. Stochastic is turned up. So you can marry that thought, right? When it goes below the 5 here, I'm getting a short signal in the stochastic right here. So the 5 is serving as a barometer as to how the stochastic is acting. Here I get a blue right there. Then I get a red. Then I get a blue. Now I get a red. Right? You see that correlation? Turns blank over here. And so since I'm using you know what my settings are on this is simulating this right here. These two settings are being simulated by the moving averages on the screen. Does that make sense? So that's why when you see a crossover over here, you see a crossover over here. It's all correlated. I mean, look at this. There should be a blue right there. So blue. There should be a red here. There you go. Pink. This closed above the 5. This is a blue. And then close below, that's a red. And close above, it's a blue. Straight blue, and then it became red. You can see that, right? But if you're not sure of what's happening over here, you can just follow this. And you know exactly what's happening. Now, if you look at this, the 5 and the 12 don't cross over. You'll see a longer trade on the H4. And when it does cross above, that's when the H4 starts to, but this was immediately down. Right? So the correlation, if I put like 4 times this, the 20 and the 48, that'll simulate the 4 hour. It won't be exact, but you'll do it, right? Make sense? Have I answered your question, or do you have? Okay, so I mean, you can see over here is going up. This is blue, or this is still red, but here's a blue, right? Turn below, this is red, and then blue again, then red, and then start to go blue again because it'll start to rise. And look at the price now; it went all the way to 70 and started to drop. But is it ready to go short? No, because neither the 4 or the 1 are giving you that sense. If I look at the 4 hour, 4 hours not in sync yet because the 5 is trying to, this current time frame is trying to slip out for the 20. So it needs to turn back over. The signal, which is not the ideal. The ideal signal is here, right? This was the ideal signal to go short. And then it started to play around. 36 pips, 26 pips. So it's sideways market. And you know that you're in a 2-ball retrace. So really what you're looking for is a 2-ball to finish and then go long. Or this gets taken out, then you go short. Yeah, I'm just saying if you're planning long term. Right. Yeah. So you're looking at this battleground here. Yeah. So your market makers are whipping you out over here, right? Here it was a long trade, right? Supposedly, but look at this. There was no trade. Right? I mean, it didn't set up for a long trade. So what they're doing is they're taking stops out. And you can see that from here. Now they're setting up for a short. But really your short is below this. Because till then it can come down here and whip you all the way out here, cause a 2-ball and go. I mean, all right. Correct. Yeah. Yeah. Well, the prop trading, right? I mean, of all the pairs we looked at as a mega trade, the pound yen or the USD yen would be the ones, right? And we trade the pound yen because it gives the most movement, right? Volatility. The USD yen doesn't give that much, but it moves steadily, right? So if you look at the pound yen to the beginning of the week on the 5th, let's look at the 5-minute, right? And we go to the beginning of the week. And we know we were looking for a long at the beginning of the week. So we come in on Monday. This is Monday, right? Monday. And say we are only looking for a long. Where do you think your long is? Is it over here? Or is it over here? I mean, you're in the middle of a trend here. You got a retracement here. So you do have a trade here, but it's not going to be a long trade, right? It's better to wait for a 3-ball, the 1 hour trend to swing up, and then look for a better entry, which is right there. This is your entry, right? So on Monday, you don't get a trade, essentially, in the hours that we trade, right? So, okay, fine. Monday is no trade. Here's Tuesday. Where's the trade here? Are you going to take this long? This is a retrace here, so you can take this long. 30 pips, right? Now you're saying, okay, news items coming out. I gotta wait. Here's my entry. Where's my exit? My exit is when the 15-minute finishes, right? So right there is my exit. And that's another 45 pips. Nice, okay. 15-minute is back in swing. Another entry here. Another exit over here. That's 35 pips. Back in swing here. And exit over here. 24 pips. 24, 45, 45, 36. So 90 plus 70, 160 pips. 4 trades. 1, 2, 3, 4. all in one day. But that's because you knew the direction you were looking for, and it kept you out of Monday. Right? You could have taken this trade for a few pips, but the rest of the day it didn't set up. This retrace was all of US session. If you're awake, you can take the trade here and say, okay, that's my trade. 36 pips. And then you come in on Wednesday and say, okay, I have a 3-ball. This is a 1 hour 3-ball, right? So let's take this is a 5-minute chart, so it's 1 hour. I want to see what the 4 hours is doing. 4 hours still long, but it's got the 4 hour 3-ball also. So am I going long anymore? I'm not, right? So go back on the 5 and say, okay, my focus has changed to a short. Now I'm doing counter trend. And where's my short? Right there's my short. Here's my exit. 10 pips. I'm just looking for shorts, right? This gives me, let's see, is there a short here? Yeah, there's a short there. But it's killing you here, right? And you can see the moving averages are not helping you. So let's say you come in here and say, okay, where's my short? My short doesn't happen till here. And that trade gives you another 20 pips. So 30 pips short, right? Now you come in on Thursday. Still looking for a short. And this is not the ideal entry. So you wouldn't have taken that. And look at the graph it was doing before that. Now you want to go short again. You say, okay, the short wasn't set up properly. So you missed this trade. Right? This would be an aggressive entry because it's all the way down here already. Correct. So what is the point? So you, and plus you have a 1 hour 3-ball here, right? So it has to break that for you to really go short. And if you look at the pound dollar, it's the same thing. You have a 3-ball here that it has to contend with. And look what it's doing. There's no trend. Four hours telling you to go short, 1 hour telling you to go long. Look at that. This is just crappy. Okay, I'm going to stop the recording. I think I've answered all your questions. Okay.